Hi and welcome to this live currency strength indicator table video with me, John, on this Friday the 17th of February. Here we have two types of table using the same studies but just highlighting different time frames. You can see that we have the trend traders table and the day traders table in front of us. We can see that the US dollar is the strongest currency at the moment on both of the tables, being S1. That is followed by the Canadian dollar at S2 on our trend traders table. However, is the third strongest currency on the day traders. The yen still remains top of our trend traders as the weakest currency, but appears as the second weakest currency on the day traders. The New Zealand dollar is the second weakest currency on the trend traders, but tops our day traders today. And we've talked about Kiwi dollar this week. I will rehash it in this video, and but we're going to talk about a different pair first. And then we're going to go around and have a look at some of the currency pairs that we've talked about this week and how they've performed. So please do stick around for that. The tables auto-update every 5 minutes, 24/7. So wherever you are, our members can access this data in real time. So what we're looking for today, like I said, is we're going to talk about actually euro yen. Euro is not a highlighted currency at the moment. However, it's in an interesting area, and we've been big sellers of the yen recently because of this weakness. So we've talked about CAD yen this week twice. We've talked about dollar yen previously as well. So there's been a lot of yen pairs that we've discussed. So we want to just cover euro yen because price has broken out of a key area of interest. So we're going to talk about dollar yen, we're going to talk about New Zealand dollar, we're going to talk about pound US dollar in this video, so please do stick around and let's jump straight in. So we're going to go through euro yen first. You can see I've got the chart up here, and at the moment I'm looking at the bigger picture of the daily time frame and looking that price has broken through this range here. So we've been ranging between the 142.75 highs and the 138 lows ever since sort of the end of December through to most recently, where price has driven outside of that range. So looking to see if price is going to continue to the upside here. You can see that I've tagged the high over here as 146.50, which were the highs back in December, and I'm looking to see if price will extend up to that level over the next few weeks, because we can see that there's this kind of decent gap between the 146.50 high and the breakout here at 142.75. So from a daily time frame perspective, I'm expecting maybe price to come up a little bit higher, maybe pull back into the 142.75 and then make its way up to the 146.50. So day traders might want to look for some lower time frame entries through here, but then the bigger picture entries want to come down back on a retest. To talk about a couple of those day trading opportunities, if you go into the hourly time frame, I've actually been looking to mark out a couple of areas of interest. You can see that we come into the 143 recently. We've rejected that 143 and we've moved higher. I was actually marking a zone in here where you can see that most recent demand come into the market around about the 143.25, and I was looking just to see if price will come back down into that level for a possible long entry, but it looks like we've missed the boat now. It looks like price didn't come back. I mean, that's like 7 pips into our zone, so we may have missed that. If I just jump down to a 15 minutes, yeah, it looks likely that we may have missed that now, unless price does find resistance at 143.60, comes back into the zone and maybe offers us an opportunity to trade back to the highs. So I was watching that zone there. However, it doesn't look like price is going to come back to it, so we may have to just wait for the bigger picture. It is a Friday as well, so we do have to be aware about holding entries over the weekend. So if we don't want to do that, we're going to wait for that price to continue to the upside a little bit of a retest at the range and then a continuation higher. The next currency pair of interest for then is one that we've spoke about quite heavily this week, and I'm going to talk about New Zealand US dollar first because obviously it features at the top of the day traders today, but it's been kind of flirting with that area for a while. So the reason why we were looking for that downside, we've kind of covered this in previous videos if you want to go take a look at that as well. But we found this sort of wedge pattern coming into the 0 spot 65 25 highs. We've then seen price break to the downside, and we were pretty much watching this consolidation above the 0 spot 63. We also have this kind of longer term trend line running through here as well. Nice consolidation around that area, which does often lead to a breakdown. And what we discussed really was waiting for price to close outside of the area, which it did. Wait for a retest of the zone around about the 0 spot 63, and then look for bearish patterns to form for an opportunity to the 0 spot 62 handle, which you can see has been tested most recently. So that's about a 100 pip move down. If I was to show you how you could have entered that move, I would have been down sort of on our hourly time frame, looking for that sort of double top pattern or consolidation. And you can see here, price consolidates at the zone, we break out the zone. So that could have been an entry possibility for you. You could have looked at a short on that close of that candle. Your stop then is in a really safe place because you can put it around 25 pips above the high. That still gives you a really good reward to risk ratio with an 85-86 pip target down through there. So if you were to consider that, that's over a 3-to-1 reward to risk. Okay, so really strong reward to risk ratio, really high probability trade because we're accessing the tables. The tables are telling us that the New Zealand dollar was looking for short opportunities. We've identified on a higher time frame in terms of the 8-hour chart the bearish pattern forming, the break of that bearish pattern forming. We've then identified the resistance zone. We've waited for price to come into the resistance zone, and then we're on our lower time frame looking for the opportunity to the downside. Okay, so that's how we want to be using these tables. And similarly this week we looked at some other market other pairs in the market. So if I was to just go over to the pound US dollar as well, the pound featured on the tables this week. It's not really featured in here right now, but if we just go back to the rolling ones, you can see that we've got pound here on the trend traders. Third weakest currency the pound was this morning. You can see actually, sorry, it's still there on pound. I mean, if we go to the day before, you can see it here. You could also see it here on the day traders, and then here on the day traders at close of play yesterday. So it was still there for a while, telling us to look for those shorts. We highlighted this zone in here. We talked about the 122 actually being broken through and traded to retest the range. So if you'd managed to look for short in and around this area here, you would have been on a real nice move to the downside. And again, we talked about potentially banking a little on the impulsive phase here and then holding some to see if it breaks through that trend line. So again, if I go into sort of a lower time frame here, I want to be looking for patterns. Now obviously this was a news event, so depending on how risk adverse you are, whether you may be limited or limit ordered the area or waited for a breakdown. But if you waited for a breakdown, you can see here we pull back down, price then kind of consolidates and breaks down through again. So maybe you got short around this area here, maybe even waited a little bit longer to just to be sure, but you could have had at least an aggressive stop would have been about 25 pips, more conservative would have been around 50 pips, and price has moved about 200 pips to the downside. And again, that's following that same process. The tables give us the clue on what chart to look at. We've then accessed that. We've then looked at our technicals, identified areas of support and resistance, and then we're looking for those opportunities on a lower time frame. I'm finally going to finish on dollar yen because we have spoken about dollar yen numerous occasions for further upside, and in particular we highlighted multiple levels. We highlighted this area down through here, which was the 130 spot 50. We then talked about the 131 spot 50 handle, and you can see ever since we kind of came up into these highs where we said look for the reversal down to the support for a long, look how price has reacted in and around that area. You can see that we come into this area. Price has now rallied 315 pips to the upside. If I was to go onto a lower time frame, you can see that it was almost that sort of liquidity grab, breaking through the low there, closing up higher. But if you weren't comfortable taking that around the news and you waited for another break and retest, you know, you've got another move in there which was 200 pips to the upside. So that's how you can use these tables to your advantage. You know, that's what we've built them for, and how Charles has built these is very complex, and it allows you to identify opportunities in the markets, and it narrows down your workload from looking at all the pairs just down to a few. So even if you just concentrated on 2 of those pairs this week, you would have done extremely well. We did talk about CAD yen quite frequently as well, and CAD yen actually came down into a demand zone. So let's just quickly finish on CAD yen. I'm conscious of taking up too much of your time, but you can see here that price has rallied to the upside. We initially talked about the breakout of 99. If you'd got in long here, yes, price has only moved about 50 pips, but it did rally about 86 pips in your favor, and you could still be holding a position towards the 101. If we were talking about what we talked about yesterday, there was a couple of areas of interest. First of all, we kind of highlighted a little bit of a consolidative pattern, and I was looking to see if price would break out to the upside. It didn't happen in the end. Price came down, and this is where we talked about if price didn't break out of the pattern in a bullish direction, you could actually look for price to come back to demand, and price came back to the demand zone and has since moved to the upside. So that move to the upside has been around about 36 pips. You could have had quite an aggressive stop loss, maybe a 20 pip stop loss on this. So again, another favorable move for you this week. So hopefully you've managed to profit this week out of some of the markets that we've taken a look at. And I hope you enjoyed all the video content, and I'll look forward to speaking to you next week. Cheers.